Okay, in this video, we're going to talk about investment hack number 6, and that is investing in your biggest losers, or said differently, prioritizing your reinvestment into your worst performers. So I'm going to talk about why we would want to do this, but then near the end of the video, I'll actually give you the easiest way that you can possibly execute this in a way that's just going to be automatic and make it super simple to do. Okay, so just in an effort to understand the concept of what we're really going for and what we're trying to achieve here, let's pretend for a second that you were going to invest in 10 stocks. Your whole portfolio was 10 stocks and you believed in them equally. And so you just wanted to do 10% each towards each 10 stocks. And so you, regardless of how much money you're contributing, you would just allocate 10% of your money to each ticker. And anytime you contributed to your account, you would just divide up by 10 and you would assign that amount of money to invest into each of the 10 different companies. And this would be fine. There's nothing wrong with that. You're just dollar cost averaging into your 10 different stocks that you believe in. But because we're investors that want to buy low, and if we ever sell, we want to sell high, we want to look for the best deal that we can. And so in that same example, if we were dollar cost averaging, let's say once a month, and you began by contributing exactly 10%, exactly equal amounts to all 10 stocks, when you went to contribute your money again the next month, would they all be worth the same value then? Well, of course not. Stock prices move up and down daily. And so over the month, you would have some stocks that had basically stayed flat, some that had gone down, and some that had gone up. And in some cases, there might be some dramatic differences. So the idea would be here that instead of contributing equal amounts each time we contribute, that we prioritize investing in our worst performers. Reinvest more money in the ones that are trading down below the others. Now, of course, this can get very complicated because you may not have just 10 stocks. You may have 17, and you may want to prioritize some of them to be a larger percentage of your portfolio and others to be more minor because they're more risky or speculative, or you just don't believe in them as much. And so this can get very hard to do manually when you're just making the decisions on your own. But for myself, when I'm making purchases, I always want to get the best deal that I can for my money. And so I always want to invest as much of my money as I can in the stocks that I believe are trading the furthest below their intrinsic value, up until the point where I've reached the limit of the percentage of my portfolio that I really want that stock to be taking up. Okay, so are you ready for the super simple, really easy way to do this? Well, my main platform that I use to invest with is M1 Finance, and they have designed their platform around this concept. There may be other platforms out there that allow you to do the same thing. I don't know about those, but I'll talk about how it works with M1 Finance. When you create your portfolio in M1 Finance, they refer to it as being a pie. And so essentially they say, how much of the pie do you want each stock to take up? And so you can choose in increments as low as 1%, how much of your pie do you want each stock to take up as far as a target percentage. And so in the example before, if I had 10 stocks and I gave them all 10%, and I came back next month, some of them, although their target was 10%, they may be only making up 7 or 8% of the portfolio, while others may be trading about even with when I made the purchases last month. They may be around 10, and others may have traded up and be worth 11, 12, 15%. So what M1 will do if you have auto invest on is, regardless of how much money that I contribute, it will look at the worst underperforming stocks, and it will allocate the money toward that stock because it's going to look at, hey, this stock is only worth 7% and the target is 10%. So it will allocate money towards that one until it becomes closer to the target than the next one. And then it will go to the next worst performing stock in my portfolio that might be at 8% or 8.5% or 9%. And so what it does is it divvies up the money that you're contributing to the fund in a very heartless, impartial way to try to bring your underperformers up to match the target. So if you have stocks that are trading really high because they've just gone on a run and maybe they're even overvalued, you won't be contributing as much to those stocks while they're priced very highly. You'll contribute far more money to your underperformers. Now, in the example I talked about, that would be if you were contributing once a month. That's just an example. You could contribute every day or every week, and you would find that the difference between how much your stocks move would, of course, be much less. But what if you only contributed once a quarter or once a year? Well, in that case, of course, the differences would be more dramatic. But M1 will execute on the same principles regardless. So if you would like to try out M1 Finance and you haven't ever used it before, I would encourage you to use the link in the description below. You'll get a little bonus the first time that you contribute to your account, and I'll get a little bonus for referring you. But the value of this feature cannot be overstated. This makes it super simple for you to contribute in a very calculated way without you having to rack your brain to try and refigure out which one is the best deal each time you contribute money. Did you find this video helpful? Give me a like on your way out. Until next time, have a great day.